You all to this seminar on corporate tax by Hedge Accounting Solution. Myself Anjith from Hedge Accounting Solution, and we are here to discuss about the basics of corporate tax and its implication in our daily business. So we are just here to discuss the main basics, how corporate tax will be implementing in our day-to-day business, as well as the basics we have to know before the implementation. What are the steps to be taken before the implementation so that we can be well prepared before the corporate tax implementation. So first of all, we will discuss about what is corporate tax. Corporate tax means it's a tax on the net income of the business. Before corporate tax in 2018, the government implemented VAT. VAT is a tax on the sales. We will be collecting on behalf of the customers and we are paying to the government. There is no tax on our income before 2023. On VAT, we are paying the taxes on the sales. There is no involvement of our income or anything in there. But now from 2023 onwards, this corporate tax we are going to pay on the net income, means the profit, or it is called a business profit tax. We are going to pay the tax on the business profit. How much profit we are getting after all the expenses, we are going to pay the tax on that income. So that's why corporate tax is also called corporate income tax or corporate profit tax. We will be paying the tax on the net income, not on our sales. We will be deducting all our expenses from the sales, and at last we will get the profit or the net income. On that income, we are going to pay the corporate tax, that is 9% corporate tax. The government said that is 9%. That 9% we will be paying on the net income only. Next, one of the main points, who all are responsible and who all are subject to corporate tax. Mainly all the companies in UAE who are having a trade license. There are many licenses like establishment licenses are there, LLC licenses are there, sole proprietorship LLCs are there, many types of licenses are there. All these companies, UAE companies who are having a trade license are subject to corporate tax. Plus natural person, individuals who are doing the business in UAE, like with the establishment license, individuals can do the business. Plus those who are doing real estate business. So they are natural person. Individuals are doing the business also. If they are generating any income from real estate or from any consulting services, they should also pay the corporate tax. So first of all, the UAE companies, everyone should pay the corporate tax. Second one is the natural person. Third category is non-residents, those people who are outside the UAE, but if they have a residence or permanent residence in UAE, they are also subject to corporate tax. That is non-resident judicial person. Those entities who are outside UAE, and if they have a permanent residence in UAE, they are also subject to this corporate tax. So mainly the UAE companies here, plus the natural persons here, plus the non-residents who are having a residence in UAE are also subject to corporate tax. Next, we will discuss a major doubt among the customers. One of the main doubts among the customers is whether this free zone is out of the corporate tax. Whether the free zone, there is no tax on free zone or something like that one is there. But as per the law, the free zone is also within the scope of corporate tax. Even if the company is in free zone, it is also subject to corporate tax. But there is a slight change in rules for the this free zone companies. For them, the government told that qualifying income is subject to corporate tax at 0%. Qualifying income is subject to 0%, and the other income, balance income, is subject to 9%. For others, everyone in the mainland license, 9% is the only criteria there. 9% corporate tax you have to pay. But for the free zone companies, they told if you are generating qualifying income is subject to 0%. But till now, the government didn't say what is qualifying income. They told one sentence, qualifying income is subject to 0%. It is taxable, but 0%. But what is qualifying income? It will be later on issued by a correspondence by the minister. That is what they told now. What is qualifying income? They didn't explain till now. So if for the free zones, they are subject to corporate tax, but For the qualifying income, it is subject to 0%, and the 0% qualifying income till now they didn't define yet. This yet to be defined. Maybe within the new budget, some minister will define what is a qualifying income. Okay, so now we already discussed what is corporate tax, corporate income tax, and who all are subject to corporate tax. We already discussed UAE companies. Then the free zones also subject to corporate tax. Although the natural persons who are doing business in UAE are also subject to corporate tax. Then who all are exempt from corporate tax? For some people, the corporate tax, no need to pay any corporate tax at all. So all the companies in UAE should pay the corporate tax, but some people, they exempt through the law. Through the law, they already told that no need to pay any corporate tax for these companies. These include mainly the government companies, the government entities, and the government controlled entities. So the normal companies and the establishments in UAE are not covered. Mainly the government companies and the government controlled companies. Then those ADNOC and Gasco like companies are doing the business of natural resources, doing the extraction and non-extraction of natural resources. Direct business. It will only cover the main companies, not the subcontract companies. Many companies here are doing the business of subcontracting of the main ADNOC. So they are not covered, but the main ADNOC, Gasco, like the government subsidiary companies are outside the scope of corporate tax. So the government companies, government controlled companies, plus those companies who are doing the natural resource business, extraction and non-extraction of natural resource, plus some public benefit funds, pension funds, social security funds, qualifying investment funds. These funds that is formed for the benefit of the public. Those public benefit funds are also excluded from this exempted category. So mainly the government companies and these public benefit funds are exempted from this category. All others should pay the corporate tax. Then who is a taxable person? We told mainly resident, all the companies who are having a trade license in UAE is subject to corporate tax, and the natural persons we told. So there is a subdivision for that one also. That is resident or non-resident. Resident means who are deriving income from UAE, having a trade license. Like before we told, natural person is there. The companies who are having a trade license in UAE, they are categorized under resident persons. Non-resident means those companies which are outside UAE, but they have a permanent establishment in UAE, like a branch of a foreign subsidiary. Like if a company is established in UK and they have a branch office in UAE, they are coming under non-resident persons. Also, they should derive some state income. If they are having an office in UAE, they should derive some income also. Then only if they are anyone is generating some income from UAE, then only they are coming under the preview of corporate tax. Even if it is they are resident or non-resident is not an issue. Even if they stay outside UAE, they are inside UAE, they have office in UAE or not. If they are deriving any income from UAE, from the UAE, they are coming under the corporate tax scenario, and they should pay the tax for the income they are raising from UAE. Next, we will move to the calculation of taxable income. We already told how we will be paying the taxes. It is told that we are not paying the taxes on the sales. We are going to pay the taxes on the net income. Like we will be deducting all the expenses from our income. Then only we will be paying the taxes. We will be deducting the expenses from the sales. Then only we will be paying the taxes. So how we are going to calculate this net income? How we are going to calculate this net income? It will be calculated annually. We will be calculating for the 12 months. What we are paying for 3 months, each 3 months, quarterly we are filing the VAT returns to the government. But for the corporate tax, we are going to pay it annually, as well as the returns, the details we are going to give the government is annually for the 12 months. It can be from June till May or from Jan to December. Normally here in UAE, normally everyone is following the financial year as Jan to December. So for everyone following Jan to December financial year, they will be having the 12 months from Jan to December, and they have to pay the tax after the 12 months. For people who are following June to May financial year, they should pay the taxes after completing the May. So there are 2 financial years we can follow. Either it can be Jan to December, or it can be June to May. So it's better if you can start the financial year like Jan to December. So you can start the corporate tax on 2024 only. If you are following June to May financial year, you will have to pay the corporate tax starting from 2023 June onwards. That is, after these 5 months, you have to pay the corporate tax. But if you are following a financial year from Jan to December, you can save at least 7 months. 7 months you can save, and you no need to pay the tax for that 7 months. You can pay the tax starting from 2024 January. So it is calculated annually, and we have to pay the taxes also annually. Then how we will calculate this income? The tax is applicable on this net income. So net income is not the sales figure. We will be adjusting many expenses, deductions, unrealized income, exempt income, many things we will adjust with our sales. Then only we will arrive at the net sales. The first thing we are going to adjust from this sales, or there will be a sales figure for the year. Whatever we are going to adjust is mainly the reliefs. The government has provided some relief to the clients. They are telling some expenses and all, you can deduct this much amount. Some expense you can deduct 50%, some you can deduct 30%. Here we will adjust the reliefs. Then we can deduct the deductions. Also, the transaction with related parties also we can adjust. Also, the losses associated also you can adjust. So we will be making from the sales, we will adjust all the expenses. We will be making the deduction of all the expenses. We will be making the adjustment of the reliefs. We will be making adjustment of the exempt income. We will be making adjustment of the related party transaction. But how much is to be deducted, which all to be deducted, is defined separately, and that we will discuss further. First, we will discuss regarding the adjustments, mainly the adjustment regarding exempt income. The exempt income we can adjust from the sales. Exempt income means for each all income we are receiving, no need to pay any tax on that income. Mainly the dividends and the profit earned from these companies are categorized under exempt income. For this exempt income you are receiving, there is no need to pay any tax. Means if you are doing a business and if you are receiving some profit from the company, no need to pay any tax on that one. If you are investing in the shares and if you are receiving some dividend from the companies, there is no need to pay any tax on these dividends. So mainly dividends as well as the profit share you are receiving from the companies and shareholdings is out of corporate tax, no need to pay. If you are receiving 1 million or 100 million, no need to pay any tax on the dividends as well as the profit share. Many people are investing in the shares, and also if you are receiving some income from the shares, either it is domestic or foreign, no need to pay any tax on that income. Then income from foreign establishments. Some companies will be in UAE. They are having a main head office in UAE and having business in Japan or UK. If you are deriving some income from these outside countries with a permanent residence, no need to pay any income for the income received from outside. The basic concept of this corporate tax is also income deriving from UAE. So if you are deriving income from outside UAE, it's from UK or Japan or any country, the companies here in UAE no need to pay any tax, or even the individuals, if they are deriving any income from outside UAE, no need to pay any tax on that one. So exempt income means this income that no need to pay any tax on this income, which mainly includes the dividends, the profit share, and also the income from outside UAE. So these three, no need to pay any tax on this, corporate tax on this income. Next, we will move to a many important topic, that is the deductions. Which all expense we can deduct from our sales. There will be a full sales for our company. We are not going to pay the tax on this full sales, We will be adjusting the deductions and then only we will be paying the tax to the government. So which all expense, whether all these expenses we are spending for the company, whether we can deduct these expense or not, that things we will discuss now. There is some criteria. Some expenses are fully allowed. Some expenses are 50% allowed. Some expenses are only 30% allowed. Some are not allowed at all. So first we will discuss the expenses which are not allowed at all. Which are not allowed. We cannot deduct. Even if we are spending 500,000, you cannot claim. One such is the bribes and commission. Commission is a part and parcel of the business in UAE. Commission everyone is paying. This commission or the bribes, these things are not allowed at all. If you cannot deduct it at all. If you are, even if you are paying a 70% of commission, that you cannot claim at all. All the illegal payments like these bribes, commission, everything is disallowed. From your sales, you cannot deduct this one. So you will be paying tax for that amount. In practically saying, you will be paying, if you are doing a business for 100 dirhams and you are paying commission of 70 dirhams, your profit is only 30 dirhams. But you will be paying tax for the 100 dirham. Why? Because the 70 dirhams you are paying for commission, that will not be allowed. Commission or bribes, that is not allowed at all. So that is one criteria. Second one is the fines and penalties. The fines and penalties you are paying is also not deductible at all. So the bribes or commission plus the fines and penalties you are paying, you cannot deduct. Donation or grants you are giving, gift you are providing. Donation, grants or gift you are providing either to the customers, your well-wishers or the shareholders, that is not allowed at all. Any donation, any grants or gift you are making, that is also not deductible. The fourth thing is we already discussed dividing the profit distribution and dividends. There is no tax on the profit and dividends, so that is also not deductible also. If you are not paying the tax, at the same time you cannot deduct that from our sales also. So dividends and profit share is also not allowed. Corporate tax you are paying. Corporate tax you are paying to the government is also a not deductible expense. Also, some expenditure not incurred wholly for the business purposes. Some expenditure like telephone expenses, that will be incurred in a bulk. Some it will be personal as well as the company purpose it is used. So if the company is reimbursing this telephone expense, that is not wholly exclusively for the purpose of the business. It is used both in a mixture way. It's like for the personal as well as the company purpose it is used, and we cannot segregate it. So such expenses, if it is not fully incurred for the purpose of the business, that is not allowed. So expenses which are incurred fully for the purpose, even if it is 10 dirham from the petty cash you are paying, you have to keep all the bills in the company name. Even if you are taking a tea from outside, you have to keep the bills in the company name, then only you can claim these expenses. So if it is, there is not a proper documentation, as well as if it is not wholly incurred for the business purpose, it is not allowed. Simply saying all the legal expenses are allowed, but it is illegal, and with little documentation, it is not allowed at all. Like commission, bribes, donations, fines and penalties, and the dividend you are paying to the owners, that is not allowed at all. Okay. Next is some expenditure are allowed only 50%. Some expenditure, if you are spending 100 dirham, you can deduct only 50 dirham. That means mainly the entertainment expenditure. We can say entertainment expenditure means if you are providing some meals, they specified it in the law itself. If you are providing some meals, means food expense, accommodation, transportation, admission fees, anything you are paying to your customers, shareholders, suppliers, or any partners of the business. It includes your customers, shareholders, or suppliers. To anyone, if you are giving some promotion or any entertainment expense, if you are giving some food allowance to them, if you are providing the accommodation, when one person is coming for a meeting, let's say your customer is coming for a meeting, and if you are providing accommodation to them, and if you are paying 5,000 dirhams, you can claim in the tax return only 2,500, half of that amount. Why? Because as per the law, they said For entertainment expense, you are allowed only 50%. If you are actually spending 100 dirhams, you can deduct only 50 dirhams from this thing. Mainly the expense spending for customers, shareholders, and suppliers for their entertainment expense. They are specified in the law what is this entertainment expense: food expense, accommodation, transportation, admission facilities. All these facilities we are providing to these four parties: customers, shareholders, suppliers, or any other partners of the business. We can deduct only 50%. 50%. Next is regarding the interest. Interest means if the company is taking a loan from a bank and if you are paying interest to the loan, as per the law, you can deduct only 30% of the net profit before this interest. Let's say we have taken a loan from a bank, and if you are paying interest, like for yearly, let's say we are paying 20,000 as interest to a bank. We cannot deduct this 20,000 as an expense. We can deduct we can deduct only 30% of the profit. After all the computation before this interest, the profit is, let's say, 1,000 dirhams. You can deduct only 300, not that 20,000. It means whatever you are paying as interest, you cannot deduct. Only 30% of the profit only you can pay, deduct as expenditure. Balance 70% you have to pay the tax. Means if you have a profit of 1,000 dirhams, 30% of that 1,000, meaning 300 dirhams. That only you can deduct as expenditure. That 20,000 you are paying to the government, it is not possible to pay it as a claim it as interest. Next is a main important thing regarding the withdrawal by the owners. Many people are having this doubt regarding the withdrawal of the owners. We are providing salary to the owners, accommodation facilities to the owners, and many petrol facilities to the owner. All these facilities we are providing to the owners, but as per the law, it is treated as part of the profit only. So you cannot deduct at all. Before we told whatever profit you are receiving from the company, you cannot deduct, right? There is no tax also on that. There is not corporate tax also on that. But why they said this one is whatever amount the owner is taking from the business, that is not deductible at all. Even if it is for accommodation, even if it is a salary, it is treated as part of the profit only. His share of profit only is part of the dividend only. We cannot deduct that amount from the profit. So we have to add it up, or in a practical sense, we are paying tax on whatever amount the owner is taking from the business. Either it is in the nature of accommodation, or in the nature of profit, or in the nature of salary. So whatever withdrawal from the owner is not allowed at all. So next we are moving to the corporate tax rate, as well as the legal complications and the practical applicability of this one. This session will be taken over by Mr. Jijo.